All right, guys. Nvidia has crushed it. They were up to 508. Now they're at 505. We don't have the exact numbers on what they reported, but it has hit 500. The question is, will it stay there? Nvidia's been a big hype stock lately. Now it's down to 484. So this is the thing. I just said it before we got on. In the first 5 minutes after the reports happened, there's a lot of volatility. It could skyrocket. Now we're at 492. The other thing is, I think this is going to be a big guidance play. I think at the end of the day, they're going to have their call at 5 o'clock or 5:30, whenever they have it. And if they don't guide well, it's going to be a problem because this company is built on a lot of momentum and a lot of hope for the future, castles in the sky. And that's what we're here to discuss. Mo and I are going to go through their actual earnings release. Mo, has it come out yet?
We have it right here.
We have it. We're going to go through that. We're going to go through a quick stock analyzer tool at the end. We're going to talk about a couple bull and bear cases for Nvidia. Bull and bear cases, I think, are just for basically the company itself, because I don't know how you justify 40. What are we at now? We're at 45 times sales before factoring in their after-hour move right now. Yep. I am short Nvidia. Do not short Nvidia along with me. It is very risky. I am down a lot of money. I'm okay with it because my short goes until June or December of 2025. And I just feel like this is a company that's been a lot of hype. It is up year to date 230% before factoring in this after hours move, which we're at $500 again. I mean, we've gone from 472 to 505 down to 482. Now we're at 500. All right, so let's take a look at Nvidia.
Revenue of $13.51 billion.
They crushed it.
Versus expectations of 11.04. Earnings per share, $2.70 versus $2.07.
So they crushed it.
Yep.
They absolutely crushed it. $13.5 billion in revenue. They absolutely crushed it, guys. Holy cow. Yeah. And I don't know, guys, we're going to go over this, and you're looking at this going, how is Paul shorting this company? Well, I believe that every investment is the present value of all future cash flow, and there is too high a price to pay for even a great thing. But most people look at a stock and think it's a ticker going up and down. And that works in trading, but when it comes to buying a business, when you buy a stock, you're buying a piece of a business. Would you pay 45 times plus this? So what does that make it now? It's up 6%, so it makes this 47 times revenue. If your neighbor next door has a flower shop that makes $1 million a year in revenue, and it has a lot of potential, would you pay $47 million for that flower shop? I don't care what it makes. I don't care if it's half profit. That's 94 times profit. Guys, this is a tough one for me. And I know in the short run, I look really stupid here. I get it. Lay it on right now. I'm not gonna fight that. Lay it on. But remember, we said the same thing about Tesla when it was 404, 414, and look at it now. It's 250, and we think it has a lot more to go down. This is a very hyped up market.
Oh.
What's up?
They are buying back shares.
Oh, my Lord.
They returned $3.38 billion to shareholders in the form of 7.5 million shares repurchased.
I'm going to say this. The only thing dumber than Nvidia's valuation is buying back shares. If you're an owner of the company.
And on Monday, they approved an additional $25 billion.
They are taking money and just pissing it down the toilet. They are investing the money at 47 times. This thing's up 9% now, Mo. $513 a share. Somebody go pray for my brother.
Look at their gross margins. Increasing. Wow. They
made $2.70 per share. How many shares outstanding do they have right now? They currently have 2.5 billion shares outstanding. They made, what is that? $7 billion this last quarter. Is that right? Is that correct? How is that even possible? How do they make $7 billion on 13.5 with a gross margin of 56%? They have overhead in there. SG&A expenses, how much?
What did you say their gross margin is?
56%. So
they're showing here. This is their summary. Gross margin of 70%.
Well, that's how you make 50% of the bottom line.
Net income.
$6.2 billion.
$6.2 billion.
So they replicate this every quarter. They're at $25 billion in profit for the year. And the company's currently at, it's 40 times profit.
So their revenue year over year is up 101%. Net income is up 843%.
Operating income up 1,263%.
Margins up 26.6%.
And what you see, and what most people out there see is boom, 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 boom. And all I sit there and say is every investment is the present value of all future cash flow. So the question is, are we paying too much for the company? The company is amazing, but you have to separate the company from the stock price. You have to separate those two things. Amazon was an amazing company, is an amazing company. It fell 96% in the tech drop, but it was still a growing, amazing company, right? Mm-hmm. What else you got, Mo?
Gaming revenue was about $2.5 billion, up 11% from the previous quarter and 22% from a year ago.
And now it's back to 500.
Come on.
Yeah, now it's back to 500.
So let's see if they put any guidance in
Guys,
here.
trillion-dollar companies, after hours, fluctuating 10%, 8%.
So their phone calls at 5 p.m. That'll be telling. I don't see any guidance.
Yeah, I think they're going to guide.
Written guidance.
Oh, yeah, I was going to say.
They'll guide in their call.
All right. So, guys, let's give an example here. So right now, I'm going to add 7% to 45. What is that? 10% is 4.5. So 7% is, call it 3.5. So they're selling about 48 times revenue right now. Let's go look at a company like Microsoft, which we think is overpriced. Not as much as Nvidia. It's 11.5 times sales. 11.5 times sales. And Nvidia just bragged about 70% gross margin. Microsoft 69%. And guess what? Nvidia, what was Nvidia's net income margin? Net income. I want to see the margin is.
The gross margins?
No, the net income margin. So net income was 6.2 billion on what revenue? 13 point what?
13.507.
Okay, that's pretty high. 6.2 to be 13.5. That's 46%. So they beat Microsoft on the bottom line margin, big time, right? But 11.5 times sales. Let's look at Apple. Apple, a behemoth. Apple, this company that is ingrained in everybody's life, 7.4 times sales. 7.4 times sales. They generated $100 billion. I look at this saying price of sales is a great way of comparing companies within an industry, within gross margin. I always like to look and say, well, let me compare them to another company with this gross margin. Let me compare them with another company with this net income. And remember, gross margin is for every extra unit you sell, how much of that's profit? How much of that goes to the bottom line to pay taxes? With a company like Nvidia at 70%, that's a big number. There's a lot of demand for them. They could hold really good margins. They might be able to say, if you want this, you got to pay. I don't blame them. I'd be doing the same thing.
Wow, look at this tweet. Nvidia feels a little undervalued. Do you guys agree? I'm just scouring Twitter right now. I like seeing the comments.
Listen, you got to remember, whenever there's a very bullish sentiment for things, you're not going to find people who are bullish on a company saying, you know, I think it's overvalued. I mean, it's very rare. It's very, very rare. And that's okay. And guess what? We could be wrong. If this company grows 50% a year for the next 10 years, this is a deal, probably. I haven't run the numbers, but hell, I mean, makes sense, doesn't it? 25 billion this year, then 37.5, and then 55 billion. I mean, before you know it, you're killing it. Of course, 50% a year for 10 years. But the question is that realistic? Let's look at our 8 pillars on Nvidia as I lick my wounds. Well, guys, this is gone. They're going to start buying back their shares. And by the way, $3.8 billion, that's 0.3% of the value of the company. God, it's such a waste of money, Mo.
Yeah, why bother?
No, it's not even that. It's just a waste. Like, guys, when companies buy back expensive shares, they are wasting your money as an investor. If you have money invested in Nvidia, the money in their bank account, you have a claim to. You own part of that bank account. When they're buying back their shares at 47 times revenue, at 250 times profit, all they're doing there is saying, we're investing in a company at 250 times profit.
Yeah, and they should just be investing in themselves at this point.
Look at their ROIC. Of course they should.
Just keep driving everything higher.
This says they get 18% return on the money that they invest in themselves. Keep doing it. Don't stop that. Keep going. But the share buyback has become this like...
And I think that's why they did it. It's because it's become this thing, and people are like, oh yeah, let's do it. It attracts people.
So we're back at the 508, Mo.
Okay. What do analysts say?
So I wonder what the new PE is going to be, the new 5-year PE is going to be. Because the current 1-year PE is 243. The 5-year PE is 222. And the 5-year price of free cash flow is 230. Sounds a lot like Tesla back in the day. But as you remember, Tesla was rip-roar. I mean, they were just growing like crazy, just like Nvidia could do. So this could last a long time. This stock could keep going up for a very, very long time. But this has been pretty parabolic for the last, where was it at the start of the year? Year to date, it was at call it 140. It opened at $148 on the first trading day of the year. It's now at 505. 505 divided by 148 minus 1, 241%. It's up 241% year to date, including after hours today. For $1 trillion company now. $1 trillion company. For those of you who don't know, 241% isn't 2.4 times. It is 3.4 times. It is up 3.5 times from its original price. That's incredible for $1 trillion company. If it was $1 billion company that was growing like crazy, I'd say, okay. I mean, we looked at the book 100 Baggers, right? Mm-hmm. And one of the things they said was, hey, some of these companies that are smaller are going to be overpriced because they can compound on themselves. Mm-hmm. They take that high return they can get by investing themselves, and they go with it. Let's see what analyst estimates are for... They haven't updated this thing in a long time. Okay, so analysts for the next 4 or 5 years, they're expecting 810 for the year ending March 2024, going all the way to $13. But look at this, Mo. This is interesting.
Yep.
14 and then down.
And then down. And when you look at what year was that where it dropped?
Between 26 and 27.
Okay. See something interesting on the revenue side as well.
Yeah.
I don't know.
That's very interesting. Man, this is incredible. This is absolutely incredible. All right, let's go to our stock analyzer tool. I'm going to do it.
Throw some numbers in there.
Okay. Mo, I need your help here.
Okay.
Because remember, they can't grow forever at 50%, can they?
No. I'm going to do 10 seems stupidly low, but you never know.
10, 20, 30.
Yeah.
Profit margin. They've crushed it. Let's call it 20, 30, 40%.
Wow. Free
cash flow margin, 20, 30, 40%. PE. Oh, this is where we're going to, guys, remember the stock market average for PE and price of free cash flow is 15. And we do believe in paying more for better quality businesses with a high ROIC with a lot of growth, which Nvidia does have.
So like 18, 24, and 30.
Oh, people are going to, listen, you guys are going to butcher us, and I get it. But 240 is insane. You can't expect that forever. You can't expect that forever. Well, let's go 20, 25, and 30.
Okay.
This is nuts. Desired return. Let's just go 10%.
Let's do it.
Because so here's what
Market
we're doing.
Average.
We're sitting there saying, listen, let's say you want to pay what the market should bear for this, a 10% return. I'm not putting any margin of safety in this. And I'm going to assume all my assumptions here. And I know you're going to sit there and say, let's do it 30%. 30% growth for 10 years would take revenue up 14 times essentially. So if they're on pace this year to do, if they did this quarter over and over again, it would be 13.5 times 4 is 55 billion times 15. They'd be at $700 billion revenue business in 10 years. 700 billion. 700 billion. They did 13.5 billion this last quarter. They did $7 billion the previous quarter. So we're going to 700 billion, 100 times more than what they did last quarter. I'm going to hit the analyze button. Okay, well, it makes sense at the highest numbers.
Yep.
Lowest numbers, 60, somewhere in the middle, 230. All right.
Yep.
I don't know. And somebody might sit there and say, Paul, you're too conservative. Yeah, maybe I am. Maybe I am. I don't know. All I know is I look at this and think to myself, man, this is a tough one. These are, I'm going to go ahead and make a statement.
Okay.
Mark this calendar right now. I want everybody to tell me how stupid I am. We're going to look at Nvidia 10, 20 years from now, and it might not exceed the maximum price it hits in this bull market. It'll be like the Intel, Cisco, those companies back in 2000 that have still yet to hit their all-time highs.
All right.
These are really, did Intel, Michael, you'd remember, did Intel ever hit 45 times revenue back in 2000? We can look. So let's see.
Think so.
But the thing is, everybody here watching now is somebody who doesn't remember Intel. They're going to say, oh, Intel's dead because now it's considered dead.
Yeah.
And this is crazy, guys. Look at it. Literally, to justify today's price, it has to grow basically 25% for 10 years. Let's do 25%. Oh, forget about competition, Michael. That's egregious.
There is no competition. There won't be competition to Nvidia. Are you crazy?
Competition? Who's this?
Never.
Who's this old fart
Never.
dinosaur over here?
When you're investing, you don't think about those things.
I still remember people telling me there was going to be no competition at Tesla. I still remember that. And Tesla has definitely led the way. I get that, but I look at it going, yeah, market watch. Nvidia stock soars after hours as AI chip giant reports record results.
All right.
crazy.
All right.
It stabilized a little bit over 500. The call is going to be very indicative. If they increase guidance, this is the way it is.
Yeah.
So guys, if you think I'm a nut job, right below. If you think I'm brilliant, right below. Whatever you want to do, right below. Subscribe to the channel. This is Nvidia. We're going to have another follow-up report later this week. We're going to do a little more thorough analysis in Nvidia, look at bull and bear cases, some more analyst estimates, get more in the nitty-gritty. So watch for that video. Make sure you subscribe and mark the notifications. That way you can get that. And you can see how insane I am for still being short Nvidia. Thanks, guys. Take care.